Hey there, welcome to the My Risk Advisor podcast. This podcast is for anyone in the financial planning ecosystem with a focus on life risk insurance. I'm your host, Phil Thompson, Director and Financial Advisor at Sky Wealth, and I've been on a business journey over the last few years going from a struggling holistic advice firm with one staff member, considering packing it all in, to pivot the business now to being one of Australia's leading specialist insurance advice firms with over 7 advisors, 30 team members, and helping hundreds of clients every single year get important insurance cover in place. I am unashamed to say that this podcast is so I can continue to grow and develop as an advisor and a business owner as I interview some incredibly smart individuals. So keep on listening so you can learn alongside me. Awesome. Today I've got Bruno Muraca, the CEO of AFRM Claims Advocacy. So thanks for joining me, Bruno.
Thanks, Phil. Thanks for having me.
So today we're going to be talking about all things insurance claims. So first of all, help me understand kind of what you guys do at AFRM.
So essentially we have a dual purpose. First purpose really is for clients sort of to alleviate their financial stress when they're injured or ill, and we do that by managing their personal insurance claim. Our second purpose really is to alleviate the time, effort imposed on advisors. So we save advisors time and money by having them outsource claims to us.
Awesome. So let's get deep into claims. I want to talk about claims experience. So my aim today is not to throw any insurer under the bus. We all like and hate every insurer equally. But tell me about some of the hardest claims that you guys have had to manage.
I think we're seeing claims becoming more difficult to manage, and there's probably a few dimensions there. One, retrospective claims are always difficult because of just trying to obtain the relevant medical information. I think the added aspect around at the moment, what we're finding is that just getting in front of a specialist, the clients are getting in front of their specialist or GP, is taking a bit longer. So that's adding to the complexity of claims. I think we're seeing a lot more reinsurers involved in claims, in particular where there are larger sums, and that can often pose its own challenges, because the reinsurer wants to understand for themselves whether the claim is satisfactory or satisfied or not. So there are multiple dimensions that I think are adding to the complexity of claims at the moment. That in itself flavours the experience, the client experience in some ways.
And so when you talk about reinsurers getting involved, so help me understand that. Is there often like double handling or double request for some information? Or is it just more when reinsurers get involved, it's just a length of time of the assessment?
There's probably a bit of both. Sometimes I feel as though there is a double up of information that needs to be provided. Sometimes they're actually after additional medical information, so they'll request an additional medical or a vocational assessment. I suppose to that point too is reinsurers will often like to also ensure that the definition is satisfied just as the insurer would, but they will always place their own lens over it also, and that's what results in the additional medical or the vocational assessment, etc.
And I mean, I've got plenty of questions about claims, obviously, but I'll start off with like the code of practice that has come in recently. Do you feel like that's helped in terms of claims? Because there was a code of practice that came in, when was it, last year, that the insurers are signed up to, where there is some kind of, not guarantees, but, a code of practice to say we will assess claims under these, assessments. Do you feel like that's helped in terms of the claims assessment space?
I think whenever there's a guideline or a code, it always sets a good boundary for us to know where the playing field is for us as advocates, but also as the insurers. So, ensuring that the client has a touch point every 20 days, ensuring that clients or we are responded to within the first 10 days of communication. That also is set out in the code. Does that always be adhered to? Most of the time it does. Sometimes there isn't, but at least there's that mechanism to say, well, it hasn't been adhered to, and let's understand why. And I think this is the point I'm sort of making earlier. The client experience is really important to us. So when an advisor sends us a client to manage their claim, it is their brand and our brand that is actually up for show, if you like. And what I mean by that is, for us, therefore, our focus is on the client experience. And by the client experience, we mean not the outcome that is reached, which hopefully, and most of the time, fortunately, it is a successful claim when we're managing it, but it's actually the journey to get to that point. The journey of actually listening to the client, being empathetic, demonstrating and giving them peace of mind. So therefore, the points we made earlier about the reinsurers getting involved in the length of time a claim's taking, sometimes those delays can be interpreted by clients as, oh, they're not going to pay, or there's a trust deficit there.
Mm-hmm.
Our role is to alleviate that so that the client understands and we manage their expectations so that they focus on their well-being whilst we focus on the administration of the claim, if you like. And that, as I said, reflects well upon the advisor as well as for us.
Yeah. And when it comes to claims, do you feel like there is like commercial decisions being made from insurers still? So, I mean, I'll take a step back. When we're setting up policies, I haven't been around for, 30 years, but sometimes we know there are some commercial decisions being made to accept policies, but it's kind of few and far between. There's not really as much scratching, the advisor's back and the insurer, doing well by the advice firm as there probably once was in the past, which is good or bad. But when it comes to claims, do you feel like there is some, element of the insurer going, well, we've got $1 million worth of in-force premiums with this advice firm, so we're going to lean towards paying a claim more, or do you feel like it's very much by the book?
Well, I think, look, insurance is a really simple game, isn't it? It's actually, you're either buying insurance or claiming on insurance. And when that balance is right, the insurers are most happiest, or the happiest, okay, if you like. I suppose for us, where it comes to for us is more so as a claim advocacy business. Most insurers will know that when we're putting up a claim, it's a genuine claim. And even if it's a bit left of centre, there are reasons for it to be left of centre, and therefore it is taken with the spirit of its intent of the policy, and therefore it is also driven quite hard by us because we really believe that this is a claim that requires a claim outcome that is satisfactory to the client. So I don't know if that's favourable, but I suppose we set a tone as a business around, hey, look, if we're putting a claim up, it's because of our understanding of how this actually meets your definition, insurer. So that certainly comes into play. Absolutely.
Is there, coming back to that, in our business at Sky, we talked a lot with our insurance partners about like our process. So the underwriters understand our process when setting up policies, that, we spend a lot of time not coaching clients to under-disclose. In fact, our clients probably on mass over-disclose when setting up the policy. But we've got to coach the underwriters to read it as truth and not, think, if they're disclosing this, what are they not disclosing? Which I find sometimes is the case with underwriters. But when you talk about when we're, as AFRM Claims Advocacy is bringing a claim to the insurer, they're kind of looking at it and going, well, these guys are experts in what they do and advocating for a claim, so it is going to be a more genuine claim. Do you feel like the insurers will sometimes go, well, because you guys are the specialists and you get referred to by advisors, and the advisors, I'm going to make an assumption they're referring because they're more difficult claims and they're not the easy, straightforward, life insurance claims. Do you feel like it may sometimes go against you guys in terms of going, well, we get the tricky ones, we get the ones that the long-term income protection or the, mental health on TPD ones, the really funky ones that the advisors don't want to work with?
Yeah, look, to be upfront, we get a combination because sometimes there's just time, effort, and energy for advisors, even with what they perceive to be the simplest of claims from the outset. But to your point, I don't know that we really are that's noticeable to us. We treat every claim as, hey, here's a genuine person who has a policy, who therefore we need to explain to the insurer, hey, here's Jeremy. Jeremy owns one of your policies. This is Jeremy's condition. This is how Jeremy's condition applies to the policy. Assess the claim outcome. And that narrative doesn't change for us, whether it be to be perceived as the simplest of claim or the most difficult of claim. If anything, the most difficult of claim, what it needs perhaps that further medical evidence or medical clarity so that the insurer says, oh yes, Jeremy's policy, recognise how it suits. It's really interesting because we sometimes have advisors who do come to us where they've got halfway through that process and they're sort of going, I thought this was going to be a simple one, but it's not. And sometimes that's a lens that we put on it will probably help to simplify some of that through our conversation, our meetings with the insurer, our understanding of the policy, even looking at and understanding, well, which policy is the right policy for this to be assessed on? Is it the policy when the policy owner took out the policy, i.e. 1983, or is it the 2022 policy which perhaps has a different definition, which may be advantageous or to disadvantage of the client. So it's even just doing those sorts of things which assist.
Yeah. And, talked about like when we bring a claim, it's going to be a genuine claim. How do you guys balance that going, well, let's try and put a case together, but at the end of the day, it's the insurance company to approve or decline a claim versus you guys putting a stop on it up front. So like in our business, we're applying for lots of cover. And when we get a drug use disclosure, we refund their clients the fee and say, hey, we're not going to be able to help you. You're going to get flat out declined. And so we've wrestled internally about how do we manage this? We're basically stopping the clients from, getting this cover. Another advisor out in the market could coach their clients to non-disclosure. And so, there's a balance between our legal obligation, making that call, knowing that we want the pool of insurance to be good and making sure every one of our clients is looked after fairly. Yep. So how do you manage that? Coming back to a much more simpler question, and I won't ramble too much longer, but do you guys ever, not take on a case if you think it's going to be a decline?
So first of all, I should say that is great to hear the transparency you provide to your clients in relation to insurance and therefore the potential down the road of claim. Because, that client may or may not ever claim. And, but the reality is you're looking at it with the lens of, well, if you do, then this is what it might look like for you. So I think, first of all, that is great. And I think that in itself is really important for our industry overall. But I'll give you an example, and hopefully, Phil, this is answering where you're heading to with it, because I think it's a really good point. We had a client recently, well, actually probably 18 months ago now, where they actually were misdiagnosed by their medical specialist. They cancelled their trauma policy and they came to us and said, hey, I've just found out that I was misdiagnosed in November last year. It is now February the year after. And in between, I've cancelled my policy. Do I have a claim? And we sat down, and on the surface, we could have gone, hang on, no, policy cancelled, diagnosis is post that time. Sorry, no. But our approach was slightly different. And we actually sat down with the client and explained to them that, look, technically you don't have a policy. It's like cancelling your car insurance today, having a car accident tomorrow and going back to the insurer and saying, hey, can I claim? So the client understood that we were taking them on a journey, which was a bit of an out of policy, if you like, approach. But what we're able to do is actually highlight that it was a misdiagnosis, get an independent radiologist demonstrate that they didn't capture. It was actually a non-Hodgkin's lymphoma, that wasn't captured, demonstrate the probability that the diagnosis and the condition was present while the policy was in play. And there was obviously a bit more detail to all that, but we were able to put that up to the insurer. It didn't get up straight away. It didn't. And in actual fact, there was a reinsurer involved. It was a significant amount, but we were able to frame it with the insurer where they could understand that, the policyholder had cancelled their policy, but the condition should have been picked up from when the policy was still in play. It was actually the medical misdiagnosis. It wasn't. So in actual fact, they eventually came to the party, and that claim did take a while to get through. And as I said, there was a reinsurer involved, and they wanted additional information, etc. So to answer your question there, I suppose on the surface you would probably look at that and go, no, sorry, we can't help. But our expertise and our ability to sort of think a bit more laterally. And I suppose our relationship with the insurers, it goes back to what I said earlier. We're putting up a genuine claimant. We're not putting up opportunistic policyholders. And I say that respectfully because I know that I don't say that there's others who do or anything like that. But we've had instances where I've had an advisor call me and say, look, I'm going to refer you to Sally. I have called Sally, and Sally said to me, well, actually it was one of my team members, I'm actually going to finish work on just after Queen's birthday, and it was sort of April or something. And what do you mean? Oh, well, that's when I'll be able to maximise all my leave. So my colleague was very suspicious. She had a chat to me about it. And I remember calling the advisor and saying, hey, did you know that Sally's circumstances? I said, look, unfortunately, that's not the sort of person that we're able to help. And it went that way. And the advisor was totally surprised, blindsided by it as well, I should say. But I don't think those sorts of people actually do our industry favours. And therefore, that's not the type of person that we take on.
Yeah, and I mean, it's coming back to the point where you say, well, the insurers know we're putting forward genuine claims, but then you've got this kind of a spicy one that you just explained. Well, it is a genuine claim. It was a misdiagnosis. It was eventually got paid. So it makes sense. But an insurer looking at a claim from you guys will be like, oh, okay, is this going to be straightforward, which, is probably 95% of the cases that you guys manage? Or is this going to be a spicy one where we've got to maybe get a reinsurer involved and, invest a bunch of time because it is a little bit more complex? And again, and this is why we specialize in setting up policies, and we help a lot of clients, and I'm a big believer in getting specialists involved, because the run-of-the-mill advice firm would have looked at that case and gone, well, as you said, policy cancelled, you weren't diagnosed until after the policy's cancelled, see you later. So that's why getting specialists involved can help advocate for the client. But again, it's coming back to that point. And, my question before about like this drug disclosures, I know as my business, if a client applies for this cover and they've recreational drug use, nothing on their medical record, I know if they apply for cover and don't disclose it, it's unlikely to ever impact the claim. It's unlikely to ever impact anything to do with the client. But we as a business make a decision not to help that client. And so I wrestle from an ethics point of view, what is ethically right, from an overall kind of PI point of view, like can we get sued for not helping these clients, non-disclose, and all of these things we kind of wrestle with. And so, as a claims advocate, advocating for that claim, at what point do you go, well, we're not going to help you with this claim, even though, it's a very similar kind of ethical kind of conundrum as that drug use disclosure. Like, how do you guys manage that? Like with that Sally case, like maybe it may not be genuine, but they may be able to get a payment. So how do you kind of manage that?
But if it's not genuine, then it's not us.
Mm.
And the way we've worked that out, so we have a two-step claim process. First of all, we'll triage or review or do a reviews on the policy and on the client's medical condition. And then from there, we can actually determine whether it's a claim, yes or no, and we make our recommendation. Often that may surface other things like exclusions, or we might get a sense of, actually, they've said on their policy that they're a non-smoker, and then we're speaking to them and they go, oh, no, he's been smoking for years, sort of a thing. That review, that first step of the dance, as I call it, for us, that triage, is often the way for us to identify whether there's a claim or not, because we don't want to take a client on an emotional investment of a claim. The probability is high for them. And then if there is a claim, we have our claim process, of which we've got, 3 types of claims: a basic, intermediate, and complex, and we explain that to the client. But we will often find it out, Phil, in that first stage, but sometimes we don't. And we've had examples where going through that process and then there'll be a non-disclosure that surfaces while we're in that second phase of managing the claim, and that absolutely has occurred. So it goes back to the intent, though. It was a non-disclosure for purpose of gain, or was it one of those things that it's occurred? And we had a client where there was a non-disclosure, but it was for no purpose of gain. Mm. And, we had them complete a stat deck. We had other supporting information to demonstrate their character, as well as then supported the claim with medical information. And the insurer, to their credit, came to the party with it and were able to get through it. But again, that you could probably argue with that in some ways, that had we gone to the underwriter at that point with that information, but if it wasn't a claim, but at the time of writing the policy, it probably would have got through. Mm. Yeah, it probably would have got through. So, we didn't split the atom there, let me be real about it, but we do come across those tricky things where we need to be able to, I suppose, leverage our expertise to be able to navigate the process. Because again, it comes down to the intent. I'm a big believer in the intent of the policyholder, who's not at their best at the moment, they're injured or ill, is that the intent actually to put a claim in and have this policy show up for what they purchased it for through their advisor, or is their intent opportunistic? Because if their intent is opportunistic, then hopefully we find that out early on, and then that's not the client for us. But at the same time, I also go into every conversation with a client with the lens of, hey, you're not at your best, we're here to help. I'm a big believer that that's where most advisors come from too. Most advisors see their clients as, if they put up their hand because they believe that there's a claim, then they're not opportunistic. They're actually people who have just had an injury or illness, and they're quite curious about how that policy applies to them.
Yeah, correct. Yeah. All right, so let's move on in terms of like when an advice business should consider an outsource claim service and when they should consider doing it in-house. Because there is this, understanding that, claims is where the advisors are there. They're there to show up and show the value. So in our business, we've got over 1,800 clients, I think, just shy of. And we've set up all these policies afresh. So we've set up all these policies. We talk about being there for claims and assisting them for claims. But I'm a believer in using specialists. And so, we haven't, sent some clients to you guys, but we've done some in-house. And so, over time, I'm thinking about as a business owner going, how do we structure this? I believe in speciality. I believe in, utilizing expertise, and we're experts at setting up the policies, but we're not yet experts at claiming on them. And so, what's your recommendation to, any, holistic advisor or even risk specialist out there who is setting up policies, but only claims on them once every few months?
Yeah, look, I really don't think there's any right or wrong approach there. But what I would say is that advisors are looking to ensure that they position themselves and are really clear to their clients around what they stand for. You're using your language there. We're experts in advice. We're experts in claims. So if you're to be an expert, you need to be singular focused and do that really well. And that's becoming a common theme. And I think that's perhaps driven by the industry. You've got the competency piece. That's driven by capacity. Advisors are finding it difficult to do all the things to therefore be able to drive the revenue, the servicing, etc. But it's also that perception to clients that we are experts in the advice. I still believe that claims are not a revenue generator for advisors. And let me clarify that. The administration of the claim, i.e. sitting on hold to the insurer for 15 minutes as an advisor or even their team, is not revenue generating. What is revenue generating is the outcome of the claim, where that claim money, the TPD benefit, the lump sum benefit, is then invested, or the policyholder or the client receives advice from their advisor. And we always send the client back to their advisor to seek advice. I've often, and you may have heard me say this, but I talk about claims, the claim experience for those who don't do it too often, manage claims that is. I talk about it's like changing a car tyre after you've got a puncture in traffic, yeah? You sort of go, okay, you're under time pressure, you're in traffic, you go to the boot and you look for the jack and you're wondering whether you got all the tools, right? And then you fumble around for the tools. It takes you a lot longer than you thought. You eventually get it done, but there's risk there because you almost got bowled over by a truck driving by. And that's no dissimilar to claims, right? There is a timing cost. There's a capability piece. Do I know that I'm doing this right? If I'm not doing this right, it can create risk for me, i.e. I can have a poor client experience and lose that client. And I think to that point, that's shaping a lot of advisors starting to think a bit differently about it. And we saw that evolution, I reckon, Phil, with mortgages years ago. Remember when mortgages came out and, hey, I'm a wealth advisor, but I also do mortgages and da-da-da. And then we realised, hang on a second, time, effort, energy. Yes, the client values the fact that we've been able to actually support them with buying that home, but it's the strategies that sit behind that have been more important than the actual source of funding it. And I think as consumers as well, or as clients, it's great to say, hey, look, I'm going to send you to an expert, because the clients know. You're my advisor. You're not a claims person. You're my advisor. You're not a mortgage person. So I think there's a bit of an edge and pull, isn't it? There's a bit of an education of clients out there. There's a bit of a reality check for some advisors to go, capacity, capability, risk, let's outsource it.
And that's where, I think the hang up is, and we're in very similar businesses. We get a lot of referrals from advisors who don't want to do insurance anymore. Now, the hang up I hear a lot from advisors who are considering referring out risk is, I've always done this. I've always said I'm really good at it. How do I then now turn around and say, now I'm outsourcing it? So that's a concern for holistic advisors referring risk to us. And similar with, risk business or holistic business who say, I'll be here for your claim. This is what the ongoing commission is paying for, this claim service. And so I guess that's kind of the hang up. What's your kind of response to that, where, a big part of the value proposition from an advice point of view is, we're here for you at claim time. How do you deal with that?
Yeah, it's a really good point, right? But being here for you at claim time can still extend to, we'll therefore provide you the best claim expert to look after you. I think the theme there is that invariably clients, when they come to see you for a claim or go to see an advisor for a claim, in some ways, what are they interested in? Let's understand it. They're interested in ensuring that they get the right claim outcome, that they get it done in a way that's quick and easy for them. Now, if you're not delivering that as an advisor, because you only do 3 to 5 of them a year, you can't have that same level of continuity, then are you actually delivering on your promise? Because I would argue that, if you're saying, look, this insurance policy, it will stack up if things don't go well for you. Do you want it to stack up and be clunky and be poor experience and take ages and really take you on an emotional journey where you don't want to be a client? Or do you want it to be seamless, be easy, be quick? And I'm sure most clients will go, you know what? I don't care where he sent me, because you know what? I've actually gone to see these guys, these experts, and they've actually got me the $250,000 in trauma or TPD, whatever it might be. Yeah, I've outlaid $3,000, but risk and return is greater. I think the other thing that's a bit of a misnomer too is the commission piece paying for claims. Is it really? Because I think that the evolution of actually writing insurance, time, effort, and energy has increased. And some advisors say to me, sometimes it swings and roundabouts, but sometimes it's really difficult to justify my time, effort, and energy to write that insurance, even though I'm getting an ongoing.
Yeah, correct. And just to be clear, that's kind of not our stance, and we're very purposeful, and we've been new. Like we're a fresh insurance only business, so we've been able to go, how do we try not to make the mistakes of the past, but also, there's a wealth of knowledge of people who've done this many, many years before us. But I've been very intentional about not saying that the ongoing commission is to be there for claims, because I know that I fundamentally believe in using specialists, and I think it is best for the majority of clients to use different specialists. Just as I talk to holistic advisors and say, outsource to us, because you're going to be setting up like 3 policies a month. Great, there's a commission and ongoing commission and whatever, but is your client getting the right experience, or did you just meet the NEOS BDM and now you're just writing all NEOS policies, or whatever insurer it is? And so, I fundamentally believe in using specialists. So let's just touch on, I've got 2 more kind of points. So fees, how do you guys charge? What's the process around that?
Yeah, and look, so I touched on it earlier. We got a 2-step process. So our first step is the triage, or the review of the policy and the medical, understand whether there's a claim, yes or no. And we charge a flat fee for that. No, typically it's around $880 for a basic one, if you like. And then if there is a claim, we are a flat fee for service business, of which we have 3 types of claims: basic, intermediate, and complex claims. And we make that assessment after the review, and we can communicate that to the client. And our basic claims commence at $2,800, and it sort of depends on the complexity from there. So it's really simple for clients to understand. It's really simple for advisors to understand. And what I mean by understand is it makes sense for them. The advisors are sitting there going, well, I can assess whether this is a claim or not, and it's going to cost me $880. Or the client $880, whichever way they want to do it. It creates good value. There's nothing worse also, and this is another point, Phil, is there's nothing worse than an advisor saying to a client after sold them the policy, but I still think insurance needs to be purchased. You still need to sell them the policy. The client still needs to be sold the policy. There's nothing worse than an advisor saying, that policy I put in place for you 18 months ago is now not going to cover you. But if you've got an independent person telling them that, it probably diffuses some of that piece, because clients sitting there going, hang on a second, I wasn't keen on taking it on, and now you're I'm not well, it's not showing up. Whereas we can actually diffuse that. We've had those examples quite a bit. I mean, recently it was really interesting. I was chatting to an advisor about, call it a fortnight ago. So most advisors we see do between 3 and 5 claims a year, okay? 3 and 5, if you think about that, 3 and 5 claims a year. So on average, some claim takes about 9 hours. If you equate the 9 hours at an advisor's time, plus the opportunity cost of writing business for them or servicing clients, it's probably a 5K exercise for them. Now, if they're doing 5 claims a year, now this advisor here, they've already had 2 for the year, so they're typically going to get 5 this year. And by the way, those 2, none of those came to us, but that's why we were chatting to him.
Yeah, that's why he's considering it now.
Actually, this time, effort, energy thing makes a bit of sense. So if it's 5K a year, 5K per claim, and there's 5 of them, it's a pretty expensive exercise for advisors. So, it's one of those things. I think we're seeing that. I agree with you. We're seeing that evolution of thinking about bringing in experts, outsourcing functions, so you do your core business well. And let's face it, there's not too many advisors I know who are sitting around going, I've got plenty of capacity. It just doesn't happen.
Yeah, that's right. So, I mean, we touched on fees, which is good. The other one I want to touch on is AFRM Claims Advocacy and AFRM, the insurance only advice firm. So, if I send you a client and you get them a claim and then they go, hey, refer friends, is Rob and Damien just going to steal my clients?
Oh, good question, eh? No, look, they're two separate businesses with two separate structures. We've deliberately leveraged the AFRM name because obviously AFRM have been very successful for over 20 years in managing insurance with clients, and the insurers are aware of the AFRM brand, but they are two separate entities. So how it typically goes is a client comes to us, we manage the claim, we ask them to go and seek advice. If they've come to us from their advisor, they go back to that advisor. If they don't have an advisor, we will make a recommendation for them and whether they need a wealth advisor or an insurance-only advisor, and then that goes that way. Sometimes we even say, look, do you have an accountant? Oh, yeah, I've got an accountant. Well, they might even have a recommendation for an advisor for you. Fortunately, AFRM are in a position where they are being successful enough over the journey where they've got a lot of clients for themselves to manage. And it's not in our makeup, either businesses, even though we are separate businesses, either businesses to be poaching from other advisors. What we do get, though, is, and as you know, is Rob and the team there at AFRM, we are getting a lot more advisors saying, hey, can you look after the insurance here for us, which is quite good because we all know about what's happening in that space and the reduction in number of advisors who play in the insurance space. And I'm a big believer in insurance for obvious reasons. We see it daily, how important it is, but we won't see the benefits of that unless it's all set up, i.e., unless advisors, obviously wider than AFRM, are doing, like yourself, providing the advice so that clients can actually get the cover they need. Because you know what? Every 19 minutes, so how long have we been going? We've been going for
36, yeah.
So there would have been 2 strokes. Every 19 minutes in Australia, someone has a stroke. And we used to think about strokes occurring to people who are known as PARs, but 24% of strokes these days are occurring for people under the age of 54. So that's someone of working age. So now all of a sudden you've moved from perhaps 2 incomes to 1 or 1 income to none in a family. And unless you have cover, you're in a really difficult position. So the importance of insurance cover is critical.
Yeah, and the reason I throw that question out is because, with advisors, I agree with you, and I see this all the time. Advisors are really keen to partner and refer out, and because at the end of the day, I've never really met an advisor who doesn't have their client's best interest at heart. There are commercial realities to go, well, I still need to be in business to have clients, to have their best interest at heart. So I'd still need to make commercial decisions. And sometimes that commercial decision for advisors is I'll keep doing these services and offering. But, more and more I am seeing, partnering and referring out. But there is always this little, voice in the back of everyone's mind of like, will they take my client? So, perfect example, financial planner will refer to us to do insurance because we don't do anything else. And so they're comfortable that if their clients, escalate into full holistic advice, they'll come back to them. But if I opened up a holistic advice firm, which I have no desire to do, but if we did, our referral partners would start to question, okay, maybe is Sky the right place to partner? And that's why, with AFRM Claims Advocacy, it's a separate entity, but there is an advice business there that specializes in risk. So I think in the back of advisors' minds, referring to AFRM or any claims advocacy who has an advice arm, there's always going to be that question. And I think you kind of addressed it. But separate entities, AFRM advice business, they're busy enough as it is. And I know Rob and Damien, and they're plenty busy. Then no one's in the business of stealing clients. So we can kind of all feel comfortable knowing that, hey, if I send them there because I feel like that's best for my client, I'm still going to, be commercially protected.
Oh, 100%. And look, we wouldn't be operating for as long as we have, and AFRM wouldn't either if we were that way inclined. I mean, the industry is, whilst it's large, it is small. And I think our reputation, whether it be Rob's and the team or mine in the team in the industry, is that, you know what, these guys are fair players. They'll do a good job. They represent good value. They'll provide a better experience for our clients. And it's a win-win. Look, it's funny. And I think the other point is, I couldn't tell you of a business, and you tell me, or maybe you'll have to tell me secretly,
Yeah.
but of a business that has done that in recent time where people know that, oh, don't send them to ABC Proprietary Limited because they actually are, they'll steal your client. I don't think that actually, I'd like to think that doesn't happen.
I mean, it doesn't happen, but it's just more perceived.
Perception, yeah.
That's where I see a lot of, people, just having this perceived concern. Okay, is this a bad commercial move for me because I'll lose clients or whatever? So I agree with you. It doesn't actually happen, but it's just that perceived risk that people always need to mitigate.
I think, and this is me being a bit cheeky but polite about it, is to say that I think it's actually you're at risk of losing a client more so as if you botch up the claim. All of a sudden the client's going, hang on a second, you tipped me into this policy 18 months ago and now it's not showing up for me. Because interestingly enough, as you know, AFCA does measure the aspect around product information and product interpretation, and that often is to do with the claim, and that has escalated. So to give you an idea, in 2018 there was like 20 odd complaints in that area. Of recent time, it's more like over 200. Okay, so this is actually
Complaints.
Well, not only claims, but let me explain. So this is actually not only, but a majority of clients going up and putting a complaint into AFCA because either the product interpretation was either they didn't believe in it from the insurer, or it might have been an interpretation at an advisor level that's actually led them to that complaint. That's something that's being measured, and that's why I say, as advisors, and we're seeing it all the time, and as that advisor I spoke about earlier, the risk of getting a claim, it's not getting it wrong, but actually it taking longer, and which therefore influences the experience of the client, it being misinterpreted, and et cetera, and therefore the experience being poor for your client. That in itself, I think, can create as much risk losing that client and your brand as anything else. We're seeing that as an indicator of what AFCA do identify.
Mate, you're preaching to the choir here. I talk about the same thing with holistic advisors doing insurance and then getting exclusions that the client didn't understand, and the advisor is also shocked. And it's like, well, that's why we give that expectation up front. So the clients are almost never shocked at the outcome because we know. And so, you're preaching to the choir. This has been a great episode, so thank you very much for your time. I've got two quick questions. Number one, when do you get time to do your emails?
Good question. My emails, I try and categorize my emails. And what I mean by that is some emails that I can do, I'm going to call it after daylight hours, if you like. So those are the ones that I could just reply to, which don't have a pressing issue. And then others, I'm still sort of a bit old school where I'm sort of fragmented throughout the day. I don't block out 12 to 1 or something. I sort of deal with them during the day that way. But they're the ones that need an answer, on the day, if you like. They've got some urgency to them, perhaps.
Yeah, mate, I'm useless with my emails. I'm just like, I'm all day long. So I'm very old school as well. And what's one interesting hobby that you have?
Gee whiz. Wow. Good one. I've got a couple of hobbies, but they're not really interesting, right? But one of my passions is football, AFL football. And I've been involved in my local football club since Auskick, which is where kids are 5 and 6 and taking up football for the first time, boys and girls. And I've been involved in the football club for, probably over 10 years. And I really enjoy that. And I'm sort of one of those parent coaches, but I'm not a coach actually. Well, that's incorrect. I'm an assistant coach now. That's a bit of fun. I do enjoy that. That's my sort of my outlet. I do enjoy that. My son plays in that team. It's a great community of parents. It's a great group of kids. They're sort of 16-year-old boys. Some of them I'm looking up to quite big. There's something in the food, obviously, but it's good fun. It's competitive. There's some real passion from the kids. There's a real good camaraderie. I really enjoy it, actually.
Yeah, awesome. I've just recently become a netball dad, and I take it way more serious than I should. I grew up playing Saturday morning sports, and our girls never have, and we kind of was like, Saturday mornings are sacred for the family. But now our daughter does Saturday morning netball, and I'm just all about that life. On our drive there, I talked to my daughter about what's she going to focus on, like what skills is she going to focus on today, and then on the drive home, we talk about, okay, how do you feel like you went? Like, what could you have done better? What did you do
Oh, the
well?
post-analysis.
Oh, I'm like way too full on. I've just got no chill in my life. And so
And what's your daughter? Is she GK? What's her position?
She's in under 11, so they move around.
Okay.
They kind of do different things, but she's a better defender than she is. It's like her second season, but yeah, I'm way more into it than I ever thought I would be. But my wife is just looking at me like, of course you were going to be into it. You're too full on. So
competitive juices. That's right.
It's at least I'm not one of those parents that like tell their kid off or yell or scream. I'm just like, I encourage. That's my job, to encourage, and then just ask how she felt like she could have done better. That's what I think about.
It'd be really interesting to actually have your daughter's interpretation of the drive home, right? Because she might feel as though it's a bit of the pressure cooker is the drive home, right? Because I'll be upfront with you. I think I was a bit of that with my son. On the way home, it's like in the car, I was like, mate, I just reckon you should have marked that one in the go.
Yeah. I've purposely not made any comments. I ask her what she's good and what she could do better.
You've gone the university. You've taken it out of the textbook coaching style. I've sort of gone the old Tommy Hofey sort of, the old school footy coaches style, where you just sort of you're direct to the point.
No, I'm trying to be good. I'm just like, I ask the question and then I'll agree when she says, "Oh, I probably could have done this," but I'm like, "Yeah, you could have." Like, you last week you were better at that, and this week you weren't as good. So I'm trying my best not to like damage my kids. But we could talk all day about our kids' sports, no doubt. But thank you so much for coming on. I really appreciate it. And if anyone wants to reach out and get in contact, how do they do that?
On our website, or we got a 1300 number. So the website's AFRM Claims Advocacy.com.au. It's a bit of a mouthful. Or 1300 013 328.
Awesome. Thanks, heaps, Bruno. Appreciate your time.
Thanks, Will. Cheers, mate.
Bye.
If you've enjoyed this episode and you think someone else will get value out of it, I'd love it if you could forward it on to them. And as always, we can continue the conversation in the My Risk Advisor Facebook group. All you need to do, open up Facebook and search My Risk Advisor, and I'll see you in there.